Hey everyone, welcome to Doc W Trades. It is November 2nd, 2025. And we're going to take a look at the S&P here, as this is an Energizer bunny type of market. It just keeps going and going and going and going with small and very seldom pullbacks and sell-offs, and just keeps going and going and going and going. We zoom in here to the S&P 500. It is trading just below the upper Bollinger Band, but is in a clear uptrend as the market broke out of this little sideways trading action after the big sell-off on October 10th. Market had some sideways action and then broke out to the upside and has traded above the upper Bollinger Bands and has pulled back a little bit inside the upper Bollinger Bands. And the one thing that sticks out to me is, even though the market is in a clear uptrend, the momentum has fallen a bit. Now it is still positive, and the long-term momentum here is still climbing and still positive. This is due, it's normal. However, basically, it means that the market is getting closer to a point where it would have to go into a consolidation sideways phase before it makes another leg higher. So it just means that the upward momentum is intact, the bullish trend is intact, but some type of sideways consolidation after this recent up move is in order. We'll take a look at the NASDAQ, the QQ, and same story here. Breakout, traded above the upper Bollinger Band, and has now come inside the upper Bollinger Band as momentum has come down. So it would make sense that we would have some type of sideways action to play out over the next couple trading sessions and then make a sharp move higher. So we'll see how that plays out. And if bad news comes or something happens along those lines, we can easily get a sell-off back to the 20-day moving average here. And you can see that can easily happen as well on the SPY as well as the Qs. And that 20-day moving average is 671 on the SPY, and almost 612 on the Qs for a pullback to the downside. But so far, the market just keeps going. So it's good to have those levels as targets for sell-offs, to know when to buy on a sell-off. But everything is status quo, and the market just keeps going higher and higher. Let's take a look at gold, as it has been getting lots of attention lately. And just recently, over the past couple trading sessions, it has had that pullback that was way overdue, in my opinion. And gold not only pulled back to the 20-day moving average here, but it went below it and is now kind of had some sideways action over the past few trading days since it's broken the 20-day moving average. As we had this big breakout, an extended run higher, and kind of a climax top here, and now this pullback below the 20-day and some consolidation after that. Going forward from here, I think that gold has now entered a sideways consolidation phase. And you have that climax run, and now you have this blow off top here. It doesn't mean that it's going to go down, straight down. I'm not saying that. What I'm saying is that gold is now set up for some sideways consolidation action. Markets in all time frames alternate between range expansion, like this, and range contraction, like this. And so that is where I think gold has transitioned into now. After its range expansion, it's now in a range contraction phase. So it could easily kind of test this high and then come back down and go back up and come back down, or kind of trade sideways around 4,000 or whatever. But the range expansion phase is over, I think, and now it's into a range contraction phase. And as time goes on, I think that gold will have some buy levels, some buy setups that will form over time, and you can look to buy it at certain levels over time as the charts play out. Right off the bat, since it's now below its 20-day, I think an initial buy point would be around 38.61, which is the lower Bollinger Band. But I think personally you should let the chart play out and let the gold kind of trade around and bounce back and forth and find some neutral fair value level in its range contraction phase. We'll go on to Bitcoin here. Bitcoin is in a range contraction phase. They had range expansion up here, and then it's had two false breakouts and is trading very close to its kind of a support level, or where you had swing lows here on August 29th, and it took out that swing low from August 29th on October 17th and bounced back. So right around 105 to 106,000 is a key level for Bitcoin. It needs to, in my opinion, trade back up above this 20-day moving average around 113,600 level, and specifically for me, trade above this swing high here of 116,700 to 116,800, where it confirms that it's going to go back up and try to test this upper Bollinger Band and this swing high that we made here on October 6th, right around 126 to 127,000 for Bitcoin. So right now, Bitcoin's not looking too shabby. It's not looking ugly or bad. It's just not looking very constructive. It needs to prove itself. It's to get above 113 to 114,000, get above 100, get above 116,000 and show that it's kind of done correctly, and make a run for 124, 125, 126,000. Look to break out to the upside. Okay, now on to individual stocks. Take a look at a couple names here. Some big cap tech stocks that have moved. Meta has been trading down on earnings, below its lower Bollinger Band. Big drop in momentum, a gap down on earnings. From this point forward, I think it needs to just consolidate and start to form a new support before it forms a base and looks to go higher, if it's going to go higher, which I think it will. I just think that from the earnings, it needs to kind of go sideways and form a base before it turns higher. I listened to the earnings call. I think that investors are Meta has a lot of projects, like these glasses, like those Ray-Ban AI glasses and stuff, and they're spending money like drunken sailors, and they're not going to stop. They're going to continue to spend money on AI infrastructure. Maybe Wall Street was a little let down that there wasn't enough revenue to support the ongoing spending in AI. They didn't get enough. They didn't get enough benefit from the spend, but they were also aware that that's the status that Meta is in right now. So I guess Wall Street is just sanguine on the fact that, they're going to keep spending on AI infrastructure, and there's not a big enough benefit yet that I think Wall Street wants to have from Meta at this point. So that's something to keep an eye on going forward. Take a look at Apple. Just keeps running higher after being in the doghouse for multiple months. It's broken out to the upside, and everything looks good with this. Momentum at highs, short-term and long-term momentum trending higher. At the upper Bollinger Band, it's due for a pullback down towards its 20-day moving average at around $258 a share, but that will set up for a buy and another bounce and have it trade back up towards $278 or $279 a share and make a run towards 280. So everything looks good with Apple at this point. I have not yet listened to the latest earnings call with Apple, so I'm not going to share my opinions about the latest earnings because I just don't know yet. Amazon, I still need to listen to this earnings call. Had a nice gap up on earnings. It's been pretty flat for the year. Not a lot of talk about that, but it had been pretty flat for the year, as you can see. And this gap up in earnings really, really shows that stock can go higher. There's been a lot of doubts about a lot of competition for their AWS as Google and Oracle building out their cloud infrastructure to compete with AWS as they're building out their AI infrastructure. The cloud infrastructure is a competitor to AWS, and it looks like their main customer, I think, with Anthropic, and this is just what I've heard from around. I still need to listen to earnings call, but I think the main customer, Anthropic, is going to invest more money and spend more money with Amazon. So that for sure helped them, and I think that's why the stock gapped up higher. Everything looks good here on the chart. Momentum's climbing. Stocks at new all-time highs. It may have to sell off a little bit and form a base before it keeps continuing to go higher, but everything looks solid there. NVIDIA, after breaking out of this flat base here, the 184 level at the end of September, it had a false breakout and came back down to the lower Bollinger Band, tested this lower Bollinger Band around 171 a share, and has now broken out again. It's above the roundy number at $200 a share, and everything looks solid in this chart with NVIDIA. I think it continued to go higher from here. Now, when you make new highs after a breakout and you make new momentum highs, that shows that the momentum can come down a little bit and the stock can come down a little bit, but you're due for at least another leg higher before any consolidation period, contraction period comes. So it's a good sign when you see this spike up in new highs and momentum. Take a look at Microsoft. As this past week, all the big tech stocks have been reporting earnings, except for NVIDIA. The stock came down after earnings. Maybe they disappointed with just not, providing enough revenue to support the massive spend on AI. I did listen to this earnings call. There was nothing really negative about it, but the stock is, sold off a bit after earnings. So everything looks strong. in the earnings call, they talked about how demand is very strong and business is doing very well. And there were no issues. Just traded lower on earnings. Still in this sideways range. This little saucer pattern, trading right near the 20-day moving average. So we'll see where it goes from here. I think it can go either way. You could retest the lows here. At the bottom of this range around 493, and it can easily test the highs here around 554 in this sideways range. Next up is Tesla. Very nice pattern forming here. I really like it. You have a nice cup and handle with a flat base, sideways base built into it. And it has its investor conference, shareholders investor conference on Thursday. So I think there is a trade here. They're working on their humanoids, their Optimus humanoid robots. They're working on their robo-taxis. They're working on the self-driving and all that. And I think that there's a good possibility that Tesla can get a big move higher on the heels of this investor conference, because if they can mention something that is not expected, that blows people's minds, and the potential for that to happen on Thursday for the investor conference really sets up a great risk reward, in my opinion, for Tesla. So this is not just an investment I'm talking about, but a trade. I think there's a great trade here ahead of the shareholders investors conference, especially as it forms this nice cup and handle, specifically this handle here, close to where it made its all-time high here at the end of 2024. Really sets up for a breakout to the upside right above $500 a share. Next stock on my list here, that is CoreWeave. I've been looking at this stock for a while as it has formed an IPO base over the past couple months, and it is now kind of forming a handle pattern from this IPO base that it's been forming, and now it's trading in this sideways range within this sideways range. So we have a small sideways range here within a bigger sideways range. If it can trade back up to this 140 to 145 level, I really think that we can get a setup where the stock can trade higher and try to retest these highs of 186 to 187. The stock does have earnings coming up, so that could be a catalyst to do it. These Bollinger Bands are getting very, very tight as the stock trades in this range here, right around the 20-day average. So it can really go either direction, and it may just keep trading sideways in this tight range until earnings come, and then it goes one direction or the other. So as we get closer to earnings, that outcome looks more and more likely. The momentum is right here in the middle on both oscillators. So right here at the 20-day, and the Bollinger Bands come together in a tight range. So that looks like it's the most likely case, that the stock kind of trades in this range and then breaks out one way or the other after earnings. But so far this earnings season, all the AI-related names, not just in tech, across the board, Caterpillar is a perfect example, have traded higher on earnings. I think Rambus has traded lower, Meta traded lower, and Microsoft a small down move. other than that, all the AI-related companies are trading higher post-earnings. And let's see, what else do I want to look at here? I saw a report on a podcast that showed the prices for DRAM memory chips are spiking and going through the roof. They're like 5 or 6 or 7 times more expensive than they were just 2 or 3 months ago. And that explains why Micron and Western Digital are doing so well. So even though companies want more GPUs, they can technically get what they want now, but they still want to buy more. It's not the same dynamic with the memory chips. They're actually having shortages where they cannot physically get enough high bandwidth memory to use to build out their data centers that they would like. So there is a true, real shortage of memory, and that is why Western Digital and Micron are doing so well. And as you can see in these charts, they are just ripping higher up by the upper Bollinger Band. As the Bollinger Bands go higher and higher, go back to Western Digital, same thing, above the upper Bollinger Band. After it breaks out of this little consolidation period here, I talked about that last week, and you see it broke out of that range over the past few trading sessions. So even though the stocks are extended, there's a thesis there, and I think that drives these stocks even higher going forward. Take a look at Robinhood. It's forming a nice kind of sideways consolidation period here. Nice, you can call it a cup and handle pattern very easily. There's the cup, there's the handle. Right below its swing highs here at the 153 to 154 level. And I think it's an early stage buy point here. You can get it here at 146, 147 before it gets close to this upper Bollinger Band where this swing high here is. And that's when the momentum guys are going to start saying, oh, yeah, we need to buy it. We need to buy it. And, that's when the stock trades to, 152, 153, 154. They'll look to buy it. You can get in early here at 146, 147. And if you want to have a stop in place, you can use 137 as your stop, where the swing low here is from October 30th. And if you're more aggressive and you want to hold it for a longer period of time, you use the lower Bollinger Band as a stop around the 125 level. Let's take a look at this other chart. Yeah. 127 is where the 50-day moving average is, and it's right above both the 20-day and the 10-day. So I think Robinhood is a good buy here, right at 146, 147, right before these momentum guys want to start buying at 153. I personally like to get in before they do. Because they have this certain mindset where it's they have to buy right before it makes new highs or when it just makes new highs. And they kind of want that confirmation that the stock stays above key moving averages. And they will go in and buy, and they don't mind being a little late because their philosophy is buy high, sell higher. So they don't mind buying a little late. So getting a little bit before them, if the stock makes an up move, works out right. Well, that is it for today, everyone. Be sure to like my videos, subscribe to them. They're all absolutely free. You don't have to pay anything. It just helps my videos get more views, and I really appreciate it a lot. take care and have a nice day.